Good morning and welcome to the early bird. And there's not a lot of change and not a lot to report either. We're still at the juncture that the markets can rise from these lows here. As you can see, they're sort of reluctantly moving to the downside. Where the Dow has been edging down lower, our markets have been having the same pattern here, going sideways. And yeah, we're no better off. But what we can do from here is we can narrow things down in terms of from a trading point of view. We could say that from the 11,900, a break below that will see us go to the downside quite strongly, and a break to the support on 12,100 would see us move to the upside. I don't see a lot of distance in the upside. Perhaps to 12.3 is the strongest resistance point. It's where the supply sits, but we can look at that when we get there. So 12,000 is the balance line. 11.9 is the trigger for lows, and support on the 12,100 would create us to the long side. So there's risk in between here in this range of picking which side that we should be on. So we need to trade. We can trade within this, but we need to trade with less position sizing and use to scale in. So once we get the break, then we can add to the position, whichever side we take. So the 12,000 here is the line in the sand. So this is support, brings it to the upside. And if this is resistance, then we can be biased to the downside. I also wanted to narrow things down a little bit and point out that we've got this particular trend line through here. I'm not a big favourite of trend lines. They're fine. However, this price here, the 12,072, we could use the whole group 2 area here, which would be 65, 72 and the 80. If the market found support above the 72, well, then we can also look to the long side as well. And the same on the downside here, the 11,972, a breaking of that would create a bias to the downside as well. So we can narrow the range down somewhat. And over the next session, this will find this is support or resistance, and we can work from that area there. Okay, so we just need to give it a little bit of time to develop here and choose a side. Once the market chooses a side and we can recognize that, then we'll trade from that point. And this reflects back into our local market, of course, as well, with the ASX 200 at 4,500. Okay, in terms of Elliott, there's the bigger pattern is a little bit confusing in terms that it's just not clear enough. And Elliott is great when you do recognise things and it is clear to you, then it's fine. When it gets a bit sort of wishy-washy and not clear, then it's better to not to place so much weight on it. What we do have here is this move up here, like this here, and this is the same in the currencies as well, the euro, the Australian dollar. Yeah, so look, the thing is that so far this move up through here is quite a clear 3-wave structure. It's not 5 waves, is it? It's 3 waves. So what that means, it means that it's a corrective move, it's a corrective rally in a bear market. So coming down a bear market, this is the ABC here of a corrective rally. Now, in the euro and the Australian dollar, they've pulled back to their 61.8% marks. It's probably a little bit sort of higher here in this term here from this last point here. So technically with Elliott, from this point, we should see this ending up as resistance, and we should be seeing ourselves move further down through here. Because a 5-wave structure to the upside here should be the 1, the 2, the 3, the 4, and the 5 coming up here. Sure, this can be a 4th wave here, and we can go up for the 5th, but it bothers me a little bit because it's overlaid. It's overlapped the top of wave 1. So when you have wave 1, wave 2 can't go below the bottom of wave 1. That's a no-no. And wave 3 up, and then we have wave 4 and then wave 5. Now, this wave 4 here can't go below the current wave 2 here, the top of wave 1 rather. It can't overlap like that. But we need to give it a bit of space, because what we could have here is we could have up for wave 1, back for wave 2, and then the third wave up here, which is always the longest and the strongest and can really extend out. It could be, and have 5 waves in it, could be up for 1, back for 2, up for 3, back for 4, and up for 5, you see? And that would be the top of the third wave. Then we have the fourth and the fifth. So that's a possibility. So we just got to keep that in mind until we can eliminate that particular thought. But as it stands, it is a corrective pattern. So if it locks under the 12 there, that would confirm that corrective pattern, and we can start to look to the downside from that point there. And the same with the S&P 500, of course. The S&P 500, we're looking for, we've basically had 5 waves down here. We're looking for an A and a B and a C back through here. And this is good because this one here shows more of a corrective pattern, because it's really overlaid the top of this group, this top of this wave 1 here. So we can pretty much label that an A and a B and a C. And then we'll be looking for further downside here. So the trick to trading this situation is that the 272 here, the 72 number, needs to become a nice strong resistance point. And, you know, a Friday's close is a bit different from a Monday, Tuesday, Wednesday, Thursday close, isn't it? Because it will just trip over into the next day. So we've got this whole weekend facing here. So allow it time to, you know, settle in on the open, on the cash, and see if it finds your support and resistance. Now, if it does find as resistance, then the trigger here would be the 65, the part of the lowest part of subgroup 2 here, and if that became resistance, then would be going down. Would go through the 1250 here. In fact, what I was doing here on the daily chart was just looking at this in the bigger picture, and this is the bigger picture here that I sort of figured that that would be looking at, you know, sort of this strong wave down here would be like the third wave. We had that little rally up here last night to around the 1280 there, and it's struggling there. So kind of see it coming down, back down to the 1250. This is just the whole trend line coming up from the lows. So it's significant, but, you know, it may only come into the 1250 here. It doesn't really matter. But in here somewhere, see a bounce back up to retest the resistance and the supply, the sellers back at that point there. So we'll see how far this bounce comes off. I think this bounce here would be the wave 4. So we'd see this as all of the wave 3 coming down, the wave 4 to here, and a wave 5 to here. And if it does penetrate the trend line here, this occurrence here is the natural path for something to move through on. And we'd see a struggle and a battle go on through here in terms of the retest of supply, and also the technical trend line as well. And after it spent some time there, we'd see it drop from that point there. So, yeah, not an easy situation to get through, but we could be sort of looking at something like this here. Otherwise, if that's not the case, there's something else going on, then we'd be seeing a stronger move either up from here, or we'd see it go up from here. So we can eliminate some of these as time goes on. So if we get a drop on Monday and Tuesday through here, then we can eliminate this one going straight up from here, and that's fine. Then we need to put that there like that, and then consider that there. And then we'd simply watch that rally move up from this point here, how it moved up, what pattern it was, how it met supply, and so forth. And then if that's the case, if it goes over from that point, then we know we've got this situation here. So just a bit of time. The same with the FTSE in terms of this situation as well. Okay, the FTSE here, we've been looking at this as an ABC correction. Excuse me. So we can look at this as down for sort of wave 1 here. We can look at this as an A and a B and a C wave moving up through here. Our target point would have been around here. And look, it may just fold straight over from here, but this move down here appears corrective, and while it's above 5,700 as the support there, we need to consider that we're still looking for a fifth wave to the upside. So basically up for wave 1, back for wave 2, up for wave 3, an A and a B and a C for the fourth, and then up for the fifth here in this particular case. So we'll be looking for a new high above this one here, coming into this area here. But of course this will depend on how the US markets unfold as well, and the currencies and for that matter. Yeah, so if this 5,700 becomes the resistance, then we can see that this A, B, and C wave is over and will be unfolding further to the downside. And this is also the same with our markets as well. Our markets are here at the 4,500 mark here. You can quite clearly see here the five-wave structure coming down through here. This is basically 5 waves down through to here. Now what we don't know is we don't know if this is actually a larger wave 5 here or a wave 1 here. So we'll see a retest of the 4,500 here, as we'll see that in the futures contracts here. So this is the futures contract here. We figured the other day that we'd see a retest back to here. So we need to see how the 4,500 is treated. If this breaks this whole sort of group 2 area here and finds that a support, resistance rather, then we'll be going to the downside. But the US markets are up somewhat, a little bit. So we'll see this push back up through here, this stage here. So this does appear to be corrective, like the S&P 500 and so forth. Let's just give it a bit more time on Monday and Tuesday to unfold and try and sort this situation out about working with this minor level 4,500 as support or resistance. So that's why I didn't put any trades out on Friday, because we just don't know where we are. There's not enough sort of evidence from the drivers that we are somewhere within all of this, and also with the currencies as well. It's sort of like if we have a look at the US dollar index to start with, because we've been talking about that. This is the US dollar index here, and we're looking at this as a 5-wave structure going all the way up to here. So 5 waves up to here, which makes wave 1 here. And then we look for an ABC correction, and the norm is the 61.8%, which is here for wave 2. The little C here is at 50%. This is the volume support area through here, so that would be where that is. So the 75 would be support. Also above here, the filter here of subgroup 1 will also act as support as well. So we should see this drift down into here and then have a bounce from that way. So what we could be looking at here is, we were looking at this as an A and a B and a C wave to here, but what could also occur here is we could find this is the A wave, this would be the B wave back up to here, and then a C wave over to here for wave 2 over to here, and then it would move up from that point. So down for wave A, back for B, down for C, and then we move up from that point there. Perhaps a little bit like this little corrective pattern in here, something of that nature, or perhaps even one of these in here. Normally they're just reoccurring patterns of different sizes, and you can get a bit of a grip on that. But while this is coming down through here, then it's going to support stock, and stock will be pushed up like the indices, the Dow, the S&P 500, and we'll see the euro and the other currencies pushed to the upside, and that's what we're seeing at the moment. So when we look at the euro here, this is a 2-hour chart. So what we've been looking at is we've been looking at the euro, we've been looking at the euro come down here in 5 waves, and then we're looking for the weakest link in Elliott is the corrections, but it does offer some science to the situation. We were looking for an A and a B wave, and then a C wave moving up for wave 2. So that's pretty much what's occurred at the moment. We didn't know how far back the wave 2 would go because the euro can have shallow corrections, but in this case here we see that 61.8% there. So that current high here is in line with that ABC corrective rally back to wave 2 there. So technically it should just roll over from that point there. So when we have a look at it on the 2-minute chart here, we can see that we've got the A wave, the B wave, and then the C wave. And the C wave is always in 5 waves, so it would be looking for 5 waves in the C wave, the 1, the 2, the 3, the 4, and the 5. So technically that should be it there, and it should roll over to the south side from this particular point here. So what we could say is that the 143 here would be the line in the sand. If this became the resistance, then we can look to short long term, and we can use the first subgroup here of 65.72 and 80 here, and obviously that's where the supply is going to be, so we're going to the demand there, so we're going to see a bounce off here back up and a bit of a struggle within here if that is going to be the case. But I do want to point out, you see the strength of that moving up through there? That's not the personality of what we call a C wave. If I could just explain something here, do my best. With an ABC correction, an ABC correction is kind of like, it's a 3-wave structure. Now, normally the C wave is a bit sort of lazy like that. So we'd see the A wave come up through here, the B wave back, and the C wave move up on low volume, right? So it'd be more of a lazy shot like that. But that's kind of not what we're seeing. We're seeing more, that's a corrective wave, we're seeing more of an impulse sort of personality. And what I mean by that is that this structure here, as a 5-wave structure coming up through here, we're seeing this move here coming up. We're seeing it quite strong. Do you know what I mean? We're seeing it like this. So it's actually like, it's got the personality of a structure like this, which is an impulse wave. So that's a little bit of a concern, because it's not giving us the personality of a corrective wave. It's giving us this pattern here. What we've got so far is more in tune with this situation here. So this strong move up here has got the personality of a 3rd wave. So we just need to be careful about that. So any short positions that have played out in here or down here further need to be very clear. They need to also be very small positions, because we can, if right, we can build onto them later. It's no big drama. And that's the same with the Australian dollar as well. If I just get onto here, you can see that ABC there. See how strong that 3rd wave up is there? So that is a bit of a concern. Once again, we've also pulled back 61.8%, which is in here, the same as the euro. This is the same sort of pattern as the Dow Jones, by the way, but the currencies have actually held up a little bit better. They haven't come back and overlapped this sort of structure here. On the Australian dollar, however, I just need to sort of point out that it does appear that we've got up for wave 1, back for wave 2, the 3rd wave up. This appears to be a 4th wave here, and this also appears to be corrective in here. And if that is corrective, then we should make a new high above here. So even if we were looking for wave 2 up here, then we'd still need to be coming up a little bit further here. So see how New Zealand opens up Monday morning, and take it from there. Now, we were looking for a C wave to make wave 2 here, but we just need to be a bit mindful that because of the strength of this here, we may have a bit more than an ABC correction. So it's coming back to the, where are we here? Sorry, I've lost the plot a little bit. Okay, that was right. Yeah. So we just got to be careful we don't have a 5-wave structure up. And what I mean by that would be up for the wave 1 here, then an A and a B and a C for wave 2. And then this would be the 3rd wave up in terms of 1, 2, 3, 4, 5 up into this area here. okay, and then we'll have a 4 and a 5 to go up further. So this strong move is giving us that sort of personality look. Just honing back in here a little bit on this area here on the 2-minute chart, you can see that. I'll just shape this back up a little bit here. Yeah, this is the situation here. So we can see that the 72 through here, the 105.72 has got meaning. This is important even if you're trading stocks as well, because this will be our stock market as well. You know, there'll be the ASX 200 because it'll be driven commodity dollar, driven that way. So this pattern here appears to be corrective. Okay, so that's telling me that that's going up through there. You can see through here that this is subgroup 1 here, the 10, the 20 and the 30. If support is found on top of the 30, then we can start looking higher at that point there. But this pattern through here is corrective because it's got overlapping wave structures. They're all sort of overlapping one another. So corrective. So what you'd be looking for is you'd be looking for support on the 20 here, the center, the pivot of subgroup 1. If support is found on that, you can scale in there and then give it a bit of time to find support on the 30 and then move in long again from there and then start taking 50 to 75% profit at the 50 here at the midpoint, because we're still looking for that possible top there. So what we might see, if this is the case in the currencies here, when we're looking at the SPY here and the XJO, we may see a push up through here, so a breakout up through here in line with the currencies and so forth. But as it comes back down, will it find support? So the breakout is important. Yes, it's part of the process, but the retest back down is more important. So this whole subgroup 2 area here, on the SPY or the XJO, if this doesn't hold up, then we've got a bigger bear picture unfolding there. But based on the 5-wave structure down through here, we should see some sort of counter trend here. I don't know if this is the low of the whole situation. We're going to be rallying from here. That's on my mind. Or we're going to see a play back up here into the whole supply area here. Too much selling going on and forcing it back down through there, because the Shanghai market is under pressure as well. If I could just point out that as well while we're here. You can see that it's still breaking to the downside here, and just sort of running over that from this point here. We've basically got sort of 5 waves in here, as we pointed out the other day, yeah, and then we've got another 5 sitting in through here as well. So this would be the 4 here. So we'd also be looking for another 5 down here as well, if that was the case. So we're looking for basically a larger 5-wave pattern, sort of. Where are we? A bit like that. I know that's a bit sort of messy, but that's the way it is. So basically each one of these in this 5 waves here, this has got 5 waves in it, this has got 5 waves in it, this has got 5 waves in it, and there would also be 5 waves in each one of these smaller ones through here. But this would be an impulse wave through here, and that's what we'd be sort of looking at through here. We'd be looking at this down at the medium level, which would be through here. And that's where we'd be sort of looking at that. So that kind of lines things up quite nicely for me. That picture of the S&P 500 that I drew out on the daily chart, it's kind of like that too. So yeah, okay. So you can see the general picture here that we are bearish. There still can be a rally, but just not quite sure just yet. So hold on there. The drivers. Okay, so what have we got here? We've got the copper here, which is base metals. We were looking at this as, yes, the bigger Elliott wave thing we have for this is a bearish picture of a wave 4 here, and this may be part of all the wave 4 here as well, just not finished. But this little move up here sort of threw a spanner in the works for me. So we've got wave 1 here, perhaps, and wave 2 here. As long as the 405 stays into play here, then we can push to the upside. Now, what we have seen here, this particular move here is also in 3 waves, so that's a corrective wave to the downside. This is also in 3 waves here, so most likely we've got an A wave in 3 waves, a B wave in 3 waves, and we'll see a C wave come down here, or just taking this light here for for a C wave here. So an A and a B and a C wave. But, you know, it can also move further down as well because of the bigger picture. I'm just not quite sure here. So there's a lot of options. So back to the drawing board, and just to say that the 400 is the support for base metals, as is the 13,000 on the XMJ, the material sector, and a breaking of 405 here would pretty much sort of flick the bias to the bearish side there. The crude, yeah, no change here really. We'll just see this edge down further. You know that 90 is the medium level, so that is the support. There's going to be a bounce off that. Also, there's 91, 92, and 93 here, as we call minor group 1. So we'll see the price bounce around a lot in this area here. Prices can move very quickly between 3 and 5 and 5 and 8. Those the fastest traveling areas. When it comes into these areas here, 1, 2, and 3, they're the slowest because that's where logically people put orders there to buy. It's okay if you're scalping, I guess, but look, coming in here is going to be plenty of bouncing in through here. There's a lot of support in here, so don't expect, you know, what you see here is not what you're going to get here. You always get the opposite of what you're actually looking at. Trends and corrections of different degrees will always trick you. So gold's in the same sort of situation as well. We can have a there's a bigger bearish picture and a bigger bullish picture, and we just don't know which is which, and that's fine for the time being. We're just sort of looking at it. We knew what parameters and what sort of needed to be done, and as you can see at the moment that this market moving up through here is hitting trend lines through here. This is also the supply area over here as well, so there's going to be a lot of pressure there as well. This move up through here can still be corrective, so it can roll over from here. We had our support at 1520. We can now lift that support to 1530. A move under that is likely to see further downside on that there. We understood that we would get a move up when we were looking at this on the video on the Friday. We could see the pattern across here was corrective, so we would push up through there again. This is a little bit like the Australian dollar. So it's just a corrective pattern, and it's a corrective pattern in the direction of the trend is a continuation pattern and will break to the upside. What you can see here now is you can see the next little impulse wave up. Without splitting hairs too much, there's wave 1 in here, there's wave 3 in here. I don't know if that's 4 and 5 into this point here, or this is going to be A, B, C for 4 here and then a push up for 5 here. I don't know that, but we know that there's resistance here and all up through here. So this can be a larger ABC correction coming back up through here. So, you know, a move, if this price finds 1530 as resistance, then you know, then the picture is bearish at that point there. This is the support. All this volume turned over here, and we'll see how it progresses from that point there. Okay, I think that's sort of about it. There's not a lot, unfortunately. I can say I can't really put out any sort of positive trades in any direction because it's just not clear, and you know, there's times to be in the market and times not. There's times to put more money in and times to put less money in. And at this particular point in time, while this market here, our local XJO here as a bit of a sort of guide stick here, while it's been doing all this across here, it hasn't really presented us with any sort of trend trading as such. So there's not a lot we can do about that. We just need to see it play out through here. At the moment, this is support through here, let's say. That was supported. It's coming down through here. When it's coming down through here, we'll be checking the demand here. If the demand is really strong, well, then we'll see this back up on the 4-5, and then we can consider ourselves maybe of taking the long side there. But we would also need to see the US markets break above 12,072. We'll also need to see some support in some of the other Asian markets as well, especially the Shanghai market that might be sort of pulled around by India and so forth. Got a bit more of a positive structure there, but yeah, look, there's just not a lot to be had here at this particular time. So it's just one of those times that we just need to trade less. Less is more, so to speak, until we've got a clear direction forming in one direction or another. All right, have a lovely weekend, and we'll see how the US markets work through their levels, and this is pretty much it here. The 12,000, the line in the sand, a break above the 1272 would see us to the positive side, and we'll be looking to look at long positions on the ASX from that point. However, any further breaking down through hit the 1192 here, then we'll be in a bias swing, and we'll be looking for a bounce off the 11.9, and then we'll catch the next one down through there, down to 11.8 from that point there. So exciting stuff, but a little bit of patience required to get the timing right for the next trend there. Alrighty, cheers.